Hey folks, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Okay, folks, it was a huge news day for crypto. Lots to talk about, so make sure you watch and listen to the end. First up, Treasury Secretary Scott Bessent says President Trump may pick a new Fed chair in a week or so. Now, we recently heard rumors about this that it may be BlackRock CIO Rick Ryder, and he's currently leading by 10% in the odds among the other candidates, and this is based on Polymarket data. Now, we talked about it in a couple of podcasts ago, and that would be incredibly bullish for crypto. BlackRock is all in on Bitcoin and the crypto asset class. They're tokenizing, they have ETFs, and much more. So let's wait and see. And of course, Trump's new Fed chair is going to do his bidding. They're going to, I think, cut rates aggressively. I think they're going to ramp up QE to the next level. QE has already started, and I think that will all bode well for the markets. But we're going to have to wait and see. Nothing's guaranteed. But I do believe Rick Ryder getting this position would be very bullish for the crypto market. Now, the big news of the day, Fidelity Investments starts its own stablecoin in a massive bet that future of banking is on blockchain. Now, Fidelity is no stranger to crypto and blockchain. They've been mining Bitcoin since like 2013, guys. Abigail Johnson, I believe the CEO, has talked about this. They, of course, have their own crypto ETFs, Bitcoin, Ethereum, and much more. And they also have a dedicated segment of their business called Fidelity Digital Assets. Now they're launching their own stablecoin. And this should come as no surprise. The Genius Act has been passed, and there's been talks about banks and other institutions looking to launch their own stablecoin. And these companies, of course, have a huge network and great distribution. They have a huge client base. They have a trusted brand. So it makes sense for them to do this. So the FIDD token will run on Ethereum, serve institutional and retail users, and comply with the new Genius Act reserve rules. So they have chosen Ethereum. Again, no feelings or emotions, but this is why I hold ETH in my portfolio. It is getting adoption. It has been the first chain that many of these institutions start on. And of course, they expand beyond that, right? If you recall, BlackRock, they started their money market or tokenized money market fund on Ethereum, and they've expanded to other chains. So incredibly bullish news, guys. And let me give you some more details. So FIDD will be backed by reserves of cash, cash equivalents, and short-term U.S. treasuries managed by Fidelity in line with the new Federal Genius Act's standards for payment stablecoins. The stablecoin targets use cases such as 24/7 institutional settlement and on-chain retail payments, putting Fidelity in direct competition with dominant issuers like Circle's USDC and Tether's USDT, while laying groundwork for future on-chain financial products. And not just Tether's USDT, but also USAT, which is their US-based stablecoin they just launched yesterday. And actually today, folks, I interviewed Western Union, the payment giant, their VP of digital assets. So I had him in the studio and we talked about their stablecoin USDPT, and that is built on Solana and their plan. So you don't want to miss that interview. It's very insightful in how they're looking at blockchain and stablecoins and crypto. So it's incredible. Everyone is looking to launch some sort of crypto related service. Again, whether that be tokenization, crypto trading, ETFs, custody, stablecoins, and much more. This is incredible news. Now, we have a big update as it relates to crypto legislation. So the White House is going to gather crypto and banking industry executives to discuss crypto market structure legislation on Monday. This is per Reuters. So they're bringing the two groups together. We know there's a lot of friction right now. Banks are trying to stop stablecoin yield that you can earn on platform and exchanges like Uphold, Coinbase, and others. And there's some other things too. They're trying to, really stop like DeFi, but crypto is here to stay, and the crypto industry is ready to fight. And we'll see what type of compromise they come up with. I don't think there's going to be a perfect bill. I don't think it's possible to do that. But I think we want to get the meat and potatoes that are things that are very important to the crypto industry in there. So let's see what comes out of this. And here we got some additional details from Sander Lutz, who is the senior writer at Decrypt Media, saying Coinbase will be in the room at Monday's White House meeting between crypto and banking lobbies to find a path forward on crypto's market structure bill, a source familiar confirmed. The meeting is going to focus on stablecoin yield, the issue that contributed heavily to Coinbase's pull of support earlier this month. Other crypto side attendees, I can confirm, include the Trades, Digital Chamber, Blockchain Association, and the CCI. So we shall see. Hopefully something good comes out of this, and the banks and the crypto industry get on the same page, and we can get the market structure pushed through with the proper markups. And speaking of legislation, the SEC staff just put out guidance on tokenized securities, laying out how federal securities laws apply and distinguish between issuer-led and third-party tokenization models. So this is really great. We need the SEC and the CFTC to put out these types of guidance, because it can't just be the crypto market structure bill. There needs to be detailed guidance from these agencies, so that moving forward, there's no ambiguity and there's no version of a Gary Gensler that comes down later and can try to roll back anything. Everything will be in place, and it will be hard for them to undo those things. So things are moving ahead. And tomorrow, actually, the SEC chair, Paul Atkins, and the new CFTC chair, Mike Seelig, are doing a joint meeting, conference, and things like that. I think Eleanor Terrett is going to be moderating that. So let's see what comes out of that. I'm expecting good things. Now, the midterm elections are, of course, this year, and Crypto Pack Fairshake reports $193 million after industry donations ahead of U.S. midterms. So anybody trying to go against crypto, they're going to get their asses handed to them. Now, don't get me wrong, this time around, the banks are also building up their political donations. So hopefully things get resolved. As mentioned, the meeting that's coming up Monday at the White House with banking and crypto officials. And but look, I've been saying Elizabeth Warren and some of these folks are going to get big fat checks. So let's see. I don't think anybody would be dumb enough to go against crypto. We know Elizabeth Warren, that's her MO, and she's working for the banks. But I think the majority of Democrats, many of who couldn't speak up when Biden was in power and Elizabeth Warren had a lot of the financial oversight power, they couldn't speak up because of politics and all that, but now they can, and many are on board. So let's see how this plays out. Folks, this episode is brought to you by Proppy. Proppy's leading the charge of putting real estate on chain. Folks, we know all assets are going on the blockchain, right? And the world's largest asset class, which is real estate, it will not be excluded. Not to mention the process of buying and selling a home and getting a mortgage will all be disrupted by blockchain. Well, Proppy is leading the charge. They have AI and blockchain technology that is making the process more efficient. And they've been around since 2017. They facilitated over $5 billion in deals. And for the buying and selling of properties, they use Coinbase for the escrow service. So you can buy or sell a house on Proppy's platform for crypto. So if you want to sell your house for Bitcoin, you can do that. So that's the awesome thing that Proppy is leading on. And they're also putting deeds on chain. They've created NFTs for properties and much more. And I'm a Proppy token holder. I have been since 2018. When I first discovered them, I recognized that, hey, no one else is doing anything in the real estate industry, but we know blockchain is going to be a big part of it. And I bought the token at that point. I think it was on Bittrex and things like that. So I've been a long-term holder. This is one of my big long-term bets, and I'm very bullish on it. And in fact, Tim Draper, a billionaire investor, he's an investor in this company, and he's still very bullish on it. So if you'd like to learn more about Proppy, go to proppy.com. Link will be in the description. Now, Coinbase launches prediction markets in all 50 states via Kalshi. So we are seeing all types of new markets and options for investing being created. And in a way, it might not be that great because it steals attention away from, crypto assets. But look, there's nothing you can do about it. The good thing is that some of these prediction platforms are using blockchain technology. So Coinbase's prediction markets will include sports, politics, culture, and much more. And even recently, I saw Coinbase and Binance added support for gold and silver. So to be able to capture the precious metals market, which has been ripping, of course. So these exchanges are, going beyond just typical digital assets. Now, look at this. Dubai Insurance launches crypto wallet premium payments, claims, settlements. So Dubai Insurance has launched a crypto-enabled digital wallet that allows policyholders to pay insurance premiums and receive claim settlements in digital assets. The wallet is designed to support the receipt of premiums and the payment of insurance claims in digital assets, and is built on institutional custody infrastructure provided by Zodiac Custody. The company said the wallet operates within existing regulatory and compliance frameworks in the United Arab Emirates and described it as the first such offering in the country's insurance sector. Folks, this is incredible. We are seeing crypto adoption in different industries and across the globe. So, Zain Surin, managing director for commercial Middle East and Africa at Zodiac Custody, said as digital asset adoption accelerates, insurers need trusted infrastructure that allows policyholders to transact confidently with digital assets. Very big news here. Okay, moving ahead, WisdomTree brings its full tokenized fund lineup on Solana. So Solana continues to get incredible adoption. They have really surged in over the past year with institutional adoption. Primarily it was meme coins and NFTs, but now many institutions are building on it. I mentioned earlier that I interviewed the VP of Digital Assets at Western Union, and they're launching their stablecoin on Solana. So pretty incredible stuff. So American asset management company WisdomTree said on Wednesday that it is expanding its tokenized funds onto the Solana network as part of its multi-chain deployment strategy. The exchange-traded product issuer said the strategic expansion enables both institutional and retail users to mint, trade, and hold WisdomTree's full suite of tokenized funds on Solana, supporting the growth of on-chain offerings. All of the company's tokenized funds, including money market equities, fixed income alternatives, and asset allocation, can now be traded on Solana. Huge adoption news here for Solana, folks. Okay, let's talk WorldCoin. We got some interesting news here. So World Token jumps 27% as Sam Altman reportedly eyes biometric social network to kill off bots. Now, a couple things to take away here. First off, I am not a WorldCoin token holder, and I'm not a hater because I know some of you may hold a token, WLD. But what I don't like, and I've been on record about this, is they're scanning people's retina and they're going to certain parts of the world and they're taking that biometric data, they're giving people some tokens, but we don't know where that data is going, right? There's not a third party audit and saying, hey, they're not doing anything nefarious with the data, right? So Sam Altman, of course, is connected to OpenAI. Are they feeding that data into OpenAI's data sets and database and all that, right? So this is where I don't trust it. I don't like it. It's a bit dystopian, if you know what I mean. But that doesn't mean the project can't do well and it can't make money. But, personally, I'm going to hold off until I see something that there is third-party accountability and, we can get some sort of audit and things along those lines. So with the biometric social network, that's also something where how are they using that data? And, is it simply under the mirage of, hey, we're going to help stop bots? Or, that's a part of it, but the bigger part is they're taking your data and doing something. I don't know. And I'm not saying they are, but we got to be careful here, right? We'll see. But the report said OpenAI has considered using Apple's Face ID or World's iris scanning orb device to verify human users, though no formal partnership between OpenAI and World has been confirmed. I'll break the story right now. Whether it happens a year from now or 2 years, they're going to feed each other and partner, guys. Come on, right? Sam Altman owns both. So World Network has raised $135 million and says it has verified millions of people. It's pitching its World ID system as a privacy-focused way to prove personhood online, even as it faces regulatory scrutiny in countries such as Kenya and the UK. So governments are still a bit skeptical here, but you know how these things work. They could easily go to these governments and say, hey, we're going to give you X amount of revenue or dollars or whatever, and or give you guys some tokens if you let us do this. And that's how it could open up. So this is something to watch, guys. It's again, it's a bit dystopian, and I'm not a fan of how they're going about it. And again, without third party neutral and maybe multiple sources saying, hey, yeah, these guys are protecting the data. They're not feeding it out anywhere. Show us the smart contract vault, so to speak, or whatever that is saying the data is secure. If they bring that to the table and it's verified, then, I would change my opinion about this. All right. Final news item here. Steak and Shake adds $5 million in Bitcoin to reserve as in-store sales grow 18%. So Steak and Shake, restaurant chain, they've continued to adopt Bitcoin and adding more on their balance sheets. Now, this is where I really like this because they're not taking all their cash and doing that. They're taking some of their cash. Unlike MicroStrategy or Now Strategy, they go raise billions and leverage up themselves to buy Bitcoin. I think that's very risky. A business that is, has revenue coming in from its normal business activities is taking some of its cash, putting in Bitcoin to outpace the deflation of currency and inflation as well. So this is really good. So they've added $5 million worth of Bitcoin to their strategic Bitcoin reserve as part of a pledge to funnel all sales made in Bitcoin straight into the fund. So the company now has a total of $15 million of Bitcoin, which is roughly about 167.7 BTC at the time of publication. So again, really great to see this, and I think more companies are going to follow suit. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Be sure to subscribe if you haven't as yet. And please support the podcast by subscribing to my free email newsletter on Substack. Link will be in the description. Grab a copy of my book. It's available in paperback and digital on Amazon. And if you want to expand your knowledge about crypto, check out my course at mycryptocourse.com. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.